Hey everybody, what's up? How's everybody doing today? Yesterday I was busy writing MMT Trader Report. If you want to get that report, go to my website, pitbulleconomics.com, and sign up for a 30-day free trial. A lot of stuff in there, a lot of very interesting stuff, I have to tell you. First of all, let me just review our MMT Trader, or my MMT Trader subscribers. We have been long this oil market from way down around 49 bucks, and it is now up over $57, and the report talks about my outlook there. Okay, some of you have realized that I no longer contribute to thestreet.com. They cut me, so they canceled me. So if you want to find out what my thoughts are, you're going to have to sign up for my MMT Trader Report. There has been a very interesting and very significant acceleration in some areas of bank credit. First and foremost, consumer loans. Consumer loans have shot up and are now rising at the fastest rate in, I believe it's 9 months. Okay, consumer loans. You had an increase 2 weeks ago. There was an increase in credit card loans of a magnitude that we have not seen in 9 years. Okay, there was a single week increase in credit card loans that we have not seen, the magnitude of which we have not seen in 9 years. Real estate loans are also really coming on strong. The amount outstanding is an all-time record high, and residential real estate in particular, the growth in those loans now at the fastest rate in 6 months. Okay, so you have real estate, you have consumer loans, auto loans up 14 out of the last 16 weeks. Okay, so you're starting to see, even though the growth in lending is still sluggish and slow, that all started to decelerate last November, a year ago, and I was on top of that before anybody. Okay, but the nominal amounts, the nominal amount of bank credit outstanding, loans and leases, that sort of stuff, those are at record highs. What this means is it is going to translate into an economic boom. Okay, I'm saying this right now. I'm telling you in advance. We're going to have, the economy is going to overheat. The economy is going to overheat. All right. We will also get on top of what is right now a level of federal government spending that is on track to make a new all-time record high, surpassing the 2009 stimulus year. And that's a done deal. That is a done deal even without the tax cuts. If you get the tax cuts thrown in, the economy is going to be running white hot. White hot. So the Fed's sitting here saying, oh, we got 3 more rate hikes all the way out to 2020, and then we're done. One of those rate hikes will happen next month in December. I am telling you this right now. They are wrong. They have it all wrong. All right. Not surprisingly, I mean, the Fed is a reactive institution. It is not just going to ratchet up rates when it doesn't see the evidence. Okay. So, you know, I'm giving them a little bit of support here. They're a reactive institution. They're going to react when they see levels that tell them to do something. What I am telling you now is that they will see those levels. The economy is going to overheat. So there are very, very important things that you need to know with that scenario, or let me rephrase that. There are major profit-making opportunities under that scenario, and those profit opportunities range anywhere from particular sectors of the stock market, particular stocks, futures or commodity markets, currencies, etc. All right, and if you think that a strong economy is bullish for like a lot of you out there who also thought the higher rates were bullish for the dollar. And I said early this year, what was the dollar index up around 104, 105? I said, it's going down. It's going down. Some of you, Jim Rogers, he's always right. They're printing money. It's going up. He was bullish. I said, it's going down. You said, no, they're raising rates. It's going to go up. You don't know anything, Mike Norman. It went down. And now we're having a little counter trend rally, but the dollar is going down. And I'm saying this, that the dollar is in a long-term downtrend. And you have never heard me say that. I'm not one of these Schiff bot fools or Jim Rogers. They're printing money. I'm saying that for a fundamental reason, which I have explained here many, many times. All right, so, and by the way, you can go back on this very YouTube channel and find my video from 2009 when I said the dollar is going up in a long-term uptrend. When all of you fools were selling a dollar and listening to people like Schiff and all those other people who thought it was going to crash because of quantitative easing and 0% interest rates, and you were all wrong, and the dollar went up basically for 7-8 years. All right, so I called that, and now I'm saying the reverse is going to happen. And this time it may be, permanent, and that is because of geopolitical, or I should say, foreign policy of the United States, national security policy. I've spoken about this in the past, the weaponization of the dollar, the use of the dollar as a weapon, where countries, even our allies, understand at this point they cannot be faced with the risk of maybe in some cases just being obliquely tied to some situation where we enact sanctions and then they are shut out, or some of their enterprises or firms are shut out of the global dollar-based clearing and transaction system. So other alternatives will come about, and that will ultimately lead to the end of dollar hegemony, of the dollar as a reserve currency. And I always said that this will happen by our own hand, and not because, we overspend or we have a lot of debt, which we don't. It will happen precisely because of what I am talking about. We will make it harder and harder for people to net save in dollars, even if they want to. We will purposely make it hard for them. And that is the way our policy is evolving. So what else? Other things. Institutional asset managers, who have been the main buyers in the whole entire stock market rally since last November, built up a net long futures position of over 1 million contracts net, that's longs minus shorts, as of back on September 19th, have been net sellers. They have already sold 20% of their position in the last 7 weeks. So they have flipped from being net buyers to net sellers. Anyway, this is all the stuff that I talk about in my report. Go get it. Go to pitbulleconomics.com. Sign up for a 30-day free trial. See you guys later. Bye-bye.